Hello, I'm Mark Attwood. I'm here today with Tobias Straessle, who's one of the co-founders of HIP Interactive Property, today to discuss the difference between debt and equity investments. If you don't mind explaining that, Tobias, that'd be great.
Well, let me explain first. These equity and debt are basically two different types or methods of financing, right? Mm-hmm. So we have to look from a lender side as well as from a borrower side, right? So that they're different in terms of their risk return profile, they're different in terms of their duration, and they're also different in terms of the ownership rights. So if you're deciding on the debt financing, you're not giving any equity away, you don't give any assets away to the investor. You basically pay an interest, so a fee, if you want, for the duration of the bond or the duration of the debt, and then you expect that to be repaid. And usually that is secured by some sort of assets, be that in the company or in terms of property, will be part of the property. If you deal with bank and you have a mortgage with the bank, they take the whole property. HIP will change that. We only take the part of the property or the value of the property that we need to cover the debt. So if you have, for example, a 20% mortgage, your collateral is lower than, the collateral requirements is lower than if you had a 50% mortgage. Equity on the other hand, gives you a right into the asset, so you participate in the appreciation of the asset, and in a company it also gives you certain voting rights, which is not really relevant for property.
So HIP is going to be a debt and equity marketplace where investors can get into both sides of this.
So it's going to be a combination of both, and investors then have an opportunity to invest in equity only, or in debt, or a combination of it. And obviously, the return depends. If you have more equity, your expected return is higher than if you just buy debt. But debt is obviously more secure because it's collateralized, but secured, and equity is not.
Okay, I think you've explained that really well. Thank you.